lecture today, or this working through this problem. So since this is going to be the exact same format as the quiz, if the first time through today you lose focus or have trouble paying attention or whatever, right after class today I'm going to post the screenshot and audio of today's class on Blackboard so you can watch it as much as you want or need to, or just, go to whatever spot you had trouble understanding and review it on your own. Okay? So, before I get into the subject matter here, let me ask everybody in here, does everybody have a computer that they can use on Friday to take the quiz on? If it's in class. You don't? Oh. Okay. So on Friday, I also got another memo today that said, stop making so many copies. And so anything more than 40 copies of something I have to send out to the printing center, and I don't feel like doing that. So Friday's quiz is going to be here, but you're going to be taking it on your computer. So it'll be on Blackboard. You'll basically get a format, an Excel spreadsheet, which is what we're looking at here today, and it will look very similar to this. Okay, so if anyone has an issue with that, please let me know before Friday, but otherwise that will be how we do it on Friday. Okay. Okay, so what you see here in front of you is an unadjusted trial balance right here, and then some information right here. This is what you're going to do your journal entries with. Okay, you're going to use this information and do some journal entries. So right here, there's 4 requirements. First, open the ledger accounts, which is all of these accounts in the ledger, into T accounts or T charts, and use their unadjusted balances to open them up. So I've already done that right here. Okay, so I have all of those accounts that are listed in the unadjusted trial balance, and all the ones that have any balance listed, I have written that out here. So also on the quiz, I will do step 1 for you. Okay, so you will have a list of all the T charts that relate to, or should be identical to, all of the accounts you see here in the ledger. Okay, so all you have to do is step 2, 3, and 4. Okay, so step 2 is going to be to take this information, and on the quiz I probably won't do as many. So here you have 6 journal entries. I may only do 3 or 4, just because I know you guys said you had some issues time-wise on the last quiz that was similar to this. Okay, but for today we'll do all 6 of these, and these 6 journal entries will give you at least one example of each of the different types of adjusting entries that we've talked about so far. Okay, so as we go through these, when you look at one of these A, B, C, D, E, or F, one of these questions or one of these pieces of information, the first thing that you should be doing in your head is trying to figure out, okay, for A, office supplies on hand at year end equal $200. Well, this is probably the hardest one to figure out, but based on that information, I need to figure out what type of adjusting entry I'm going to make here. Okay, so if I look over here, or I could look at my T chart, but I look over here and I see that I have on the unadjusted balance, I have a $1,000 debit balance in office supplies. Okay. And at the end of the period, I actually only have $200 left worth of office supplies. So what type of adjusting entry would have me going from these office supplies that I had on hand before and adjusting to show that I've actually used some of this expense? Anybody have any idea which one that would be? Like I said, this is the hardest one to recognize just based on what you see here. Anybody want to take a stab at it? Yeah. Okay, so yeah, that would be the journal entry, but I'm just asking, like, of the different types of adjusting entries, this is prepaid expense. And the reason that's important to know is because if you know what type of adjusting entry this is, then you can just take and look at your templates for the various types of adjusting entries and know that that's going to be a debit to an expense account and a credit to office supplies. Okay, and just like she said right there, we would look over here and see what's the relevant. Remember, whatever journal entry I do has to use the accounts listed on the trial balance. Those are my choices. Okay, so if I'm picking an expense account to show the supplies expense that I want to keep track of, and I look over here at my expense accounts, there's really not too many choices here. Supplies expense obviously makes the most sense. Okay, so I'm going to have a debit to supplies expense and a credit to office supplies. Okay, that's the format. So if I had recognized what type of transaction or what type of adjustment this needed to be, then this is what the template would look like. Now, how do I figure out how much money to put in that journal entry? Well, you started with $1,000. At the end of the period, you want the balance to be $200. So what's the difference between $1,000 and $200? $800. Okay, so that's what I'm going to put in here. And we won't do this till the next step, but if I looked at this T-chart down here, if I take $800 and put it on the right side of office supplies, then I can see that I'd have 1,000 here, 800 here, and that would give me a debit balance in this account of $200, which is what this told me right here. Okay, so like I said, that first one is going to be the hardest one to figure out as far as which type of adjusting entry this is. And I haven't decided yet, but I may actually tell you for each of the journal entries, okay, this is a prepaid expense example. Okay, this is a unearned revenue example. Okay, just because I don't want that to be the one thing that screws you up. But once you know what type of adjusting entry it is, all you're basically doing is plugging in the template and putting the answer down there. Okay, so this next two should be easy, right? You see the word depreciation, you know this is going to be some type of depreciation problem. And I told you in class before that when you see depreciation, there's only one format for the journal entry. Okay, it will be a debit to depreciation expense and a credit to accumulated depreciation. Okay, and I said the only thing that may be slightly different about that is it may be a little bit more specific. So instead of just depreciation expense, I look at my accounts, and over here I see that I have actually specified between depreciation expense furniture and depreciation expense building. Okay, since this question is asking about depreciation on furniture, should be pretty obvious which of those two I'm going to use. Okay. Likewise, with accumulated depreciation, you see that I have that separated between accumulated depreciation furniture and accumulated depreciation building. Okay. So, debit is going to be to depreciation expense furniture, credit, accumulated depreciation furniture. Okay, and the amount was $2,000. So, as long as you had your templates handy and you saw this was a depreciation example, then you should be able to just plug and play there. Okay, and depreciation on building, number C or letter C, should be exactly the same as we had in B, except now instead of furniture as the specific account, it's going to be buildings. Okay, So I have a debit, depreciation, whoops. This was for $1,000 this time. Okay, does everyone see how I did that with depreciation? As long as you have the template, you know debit depreciation expense, credit accumulated depreciation. The amounts are given to you, so those ones, depreciation should be pretty straightforward. Okay. D, salaries owed but not yet paid. What type of adjusting entry is that? From the perspective of the company, I, the company, owe something, so I've incurred this expense, but I haven't paid it yet. Anybody remember what that type is called? What did you say? A salaries payable is going to be part of the journal entry, but that's not the name of the adjusting entry. Accrued expense, yeah. But I don't care if you say it however you want to say it, as long as you can recognize it on the piece of paper, right? So for accrued expense, we're going to have a debit to some type of expense account and a credit to some type of payables account, okay? And in this case, it's talking about salaries. So I go over here and I look, and I see under the expense account that I actually have something called salaries expense, and I see under my liabilities accounts that I have something called salaries payable, okay? So I do have specific accounts related to salaries, okay? But the template tells you it's going to be some type of debit to some expense account and a credit to some payables account. So debit to salaries expense, and the amount was $500. Credit to salaries payable, $500. Okay. If you just got to where you weren't really paying a ton of attention, you might say, "Oh, this salaries payable could be accounts payable." Okay. And if you went and did this problem and put accounts payable there, see, we do have an accounts payable account in here. So if that's the one you use instead of salaries payable, well, it's not the most correct answer because there is a salaries payable account, but I probably wouldn't take any points off for that. As long as you had the expense account and the payable account in that format, I would probably let you have that. Okay, but just know that if they do list a specific account that specifically talks about salaries, then that's probably the one that we're going to use. Okay, so now E, accrued service revenue. Well, right there in the information, it tells you what type of adjusting entry this is. Accrued revenue. Okay, so what does my template look like for accrued revenue? What's the debit? Someone either by memory or look back on your notes. What should I be looking for here? Okay, always going to be accounts receivable. So I would look at my template, and then I would look over here and make sure I have an accounts receivable account on my ledger, and I do. Okay, the amount was for $1,300. So I have a debit to accounts receivable for $1,300. And what was the credit side of that? Service revenue. Okay. And I think in the template I said it's got to be some type of earned revenue account. Well, if you look over here at your ledger, we have we have unearned revenue and we have service revenue. Those are my only choices that talk about revenue. So obviously service revenue would be the only earned revenue account that I can choose from. Okay. Finally, again, just in the information from F there, it tells you what type of adjusting entry this is. $3,000 of unearned revenue. So this is going to be an unearned revenue entry. So what is the debit side on an unearned revenue entry? Again, look at your notes or tell me from memory. What am I getting here? As the company, what am I getting in F? cash of $3,000. And then the credit side, I just want to show that I have not earned that yet, so I will record it as unearned revenue. Okay? And those are my journal entries. That's really, other than just not paying attention and not being able to move numbers around, this is really the only place you could screw up. Okay? Because once you have these journal entries done right, the rest of it is just taking numbers from these and plugging them in down here, okay, to the various accounts that they go with. So I have for A, I have a debit to supplies expense for $800. So debit just means put it on the left side. Supplies expense, $800. Credit to office supplies, $800. I've already put that in there. So A is done. B, debit to depreciation expense, $2,000 for furniture. So I look for depreciation expense furniture, $2,000 debit. Credit to accumulated depreciation furniture, $2,000 credit. Okay, right side. So now B is done. C, debit to depreciation expense buildings. Depreciation expense buildings. Debit, $1,000. Okay. Credit to accumulated depreciation building, $1,000. Okay. Debit to salaries expense, $500. Find salaries expense, that's supplies. Salaries expense, $500. Credit to salaries payable, $500. Salaries payable, credit side, $500. D is done. E, accounts receivable, debit, $1,300. Accounts receivable, left side, $1,300. Credit to service revenue, $1,300. So I find service revenue. E is done. So now F, credit or debit to cash for $3,000. Credit to unearned revenue, $3,000. Okay, I just basically moved the information from my journal entries down into my T-charts. Does everyone understand how to do that? Okay, that should be pretty straightforward. All you're doing is walking through one by one, line by line, and putting that information down into the bottom. Okay, so that was part 3, part 3. So now I'm just going to go through and make sure I know what the balance is in each one of these accounts. So if I have a debit of $6,000 plus a debit of $3,000, what's my balance? $9,000 debit, right? Debit $5,000 plus $1,300. $6,300 debit. Office supplies, debit $1,000, credit $800. Debit $200. Does everyone see how we got the total of that one? Okay, the easiest way to do these when you have information on both sides is you just take the biggest number minus the smallest number. That gives you 200, and put it on the side that had the biggest number. Okay? So debit 200, office supplies. Furniture, nothing changed. There's only one entry. I'll just put that down at the bottom. 4,000 plus 2,000, 6,000. They should all be super easy when they're all just on one side or the other, because all you're doing is adding straight down. 30,000 plus 1,000. Land doesn't change. Accounts payable doesn't change. One entry here. 8,000 plus 3,000. $60,000 plus 1,300. 16,000 plus 500. And I did nothing with advertising expense. Okay, so now that I have a total for each one of these T-charts, I know what the balance is in each one of those. I'm just going to take that balance and plug it in to my adjusted trial balance. Okay, so start with cash. Balance was 9,000 debit. So I put 9,000 on the debit side here. Remember, other than the total line, you should only have information on either the debit or the credit side for each one of these. Accounts receivable, 6,300 debit. Office supplies, 200 debit. Furniture, 10,000 debit. Accumulated depreciation furniture, 6,000 credit. Building, 40,000 debit. Accumulated depreciation building, 31,000 credit. Land, 10,000 debit. Accounts payable, 2,000 credit. Salaries payable, 500 credit. Unearned revenue, 11,000 credit. Mudge capital didn't change, so that's 12,000 credit. Mudge withdrawals, debit, 25,000. Service revenue, 61,300 credit. Salaries expense, 16,500 debit. Supplies expense, 800 debit. Depreciation expense furniture, 2,000 debit. Depreciation expense building, 1,000 debit. And finally, advertising expense, 3,000 debit. So now that I've put all those in there, I check to make sure that this is right, and the easiest way to check, this won't guarantee that it's right, but it gives me a pretty good idea, is I'm just going to add up all the debits, then I'm going to add up all the credits, and they should balance. Okay, so 123,800 and 123,800. So any questions on getting from the T-chart information down to the adjusted trial balance? Should be pretty simple, right? Everybody's going to get 100 on this one? Okay, so this will be on Blackboard. Remember, bring your computers on Friday to take the quiz. Anybody have any final questions? Yep, whatever you want for the quiz. Okay, Friday.